Welcome back, traders and investors, to Benzinga's pre-market prep. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Jason Goepfert on the line. He is president and CEO of Sundial Capital Research and runs a site, SentimenTrader.com. How you doing this morning, Jason?
I'm doing fantastic. Thanks for having me.
Okay, you got a lot of pressure on you today.
And why is that?
Because you come recommended from Fari.
That is a very high recommendation. I'm honored to have his endorsement.
And so just quickly, how have you become colleagues with Fari?
It goes back, probably, it's more than 10 years. I think we got introduced probably first through Minionville with Todd Harrison, and went to a retreat back there and kind of struck up a friendship. And I was extremely impressed with his knowledge, and being in Chicago and around the pits and stuff like that. His knowledge is pretty incredible. So it's been great to interact with him over the years, and he's he's very impressive.
He's fiery. Do you have a favorite?
He is fiery. That's right. He is certainly an individual.
Do you have a favorite fiery story or something that we can tease him about a little bit?
Not really. Just his energy is incredible. It's something that I'm always impressed with. Is that I don't know how old he is, but if I can maintain that kind of energy level, I would be very happy.
Okay, so tell us about your firm, Sundial Capital Research, and what kind of services you offer.
Well, the main publication is SentimenTrader, and that's a retail and institutional-oriented product that just basically tracks sentiment across stocks, bonds, commodities, currencies, etc. Gearing more towards sectors and ETFs now. I think that's probably where the most opportunity lies going forward. I think we're going to be less, everything goes up and down at the same time, and we'll have more individual trading opportunities in certain sectors and things like that. So that's becoming more and more of a focus. So that's one part of it. The other is consulting for primarily hedge funds and strategists that are a separate thing from the website. So that's the main makeup.
And how do you measure sentiment?
Lots of different ways, preferably using real money. So we certainly track sentiment surveys that have been around for a while, and they have use, even though it's just people's opinions. They have a long history, and typically people do what they say they're going to do, at least in the financial markets. So our focus is primarily on real money. We look at, a lot of the stuff that has been out there for a long time, options, indicators, and mutual fund flows in particular, and that's a really good focus, especially now with the proliferation of ETFs. We're getting much more granular data on how people are shifting their money. So that's an excellent focus area. And now as trading volume in some of these ETFs starts to expand, we're getting more and more data on a sector level where people are putting their money. So that's a great introduction over the past several years.
And how about the University of Michigan Consumer Sentiment Survey? That's pretty widely followed and publicized. Is that something you take stock in?
It is. We follow it. It's extremely long-term. Obviously, it's been around for 50 years or more. It's a monthly data point, so it's certainly not for day trading. And it's like many others where it simply follows the market. If the market rises, typically people are more bullish. If the market falls, they get more bearish. And a lot of these economic surveys, certainly aren't focused specifically on stocks, but stock performance is a big component of them. So it's a coincident indicator, like many of them. And when it becomes extreme, that's when you really want to pay attention. The rest of the time, it's usually safely ignored.
Yesterday, Goldman Sachs came out with a sentiment survey amongst his customers, and it was just too high. It was at 100%, and their predictions are when it reaches that extreme level, there's usually some kind of decline in the market. I'm sure that's not all the reason for the decline yesterday, but is that something you follow?
It's not. I don't have access to that data. I did see the chart, and it actually coincides very well with something that we do, just called dumb money confidence. It's a pejorative term, but basically it just measures bad market timers through options ratios and fund flows and things like we discussed earlier. So that had reached 79%. So basically these people were 79% confident in a future market rally. That's extremely high over the past 20 years. And it's, I believe, the third highest reading of this bull market over the past 5 years. So that's troubling. It's certainly not a bull market ending kind of reading. A lot of these sentiment indicators just aren't good for that kind of macro call. But on a 1 to 3 month time frame, typically when we get that high confidence from those types of traders, stock returns are subpar or negative over that time frame. So that coincides with that Goldman study and some of the others that are out there currently showing extremely high optimism among traditionally bad market timers.
And what would be a bull ending sentiment reading to you, in your opinion?
That's kind of the holy grail question, isn't it? And looking out over 100 years, I don't think you're ever going to find something that consistently is an accurate predictor of that. You can go back, even over the past 20 years and see some of the things that preceded market collapses, and they were inconsistent. Margin debt is kind of sort of one of those, but prior to the past 20 years, it was not very accurate. So things change. Basically, what I look at is a really broad-based, all-out stampede into stocks. We're kind of sort of getting there, but not close in my opinion. It would take probably another year of really kind of a rampant market rise to trigger that kind of enthusiasm.
And how long have you been, observing sentiment in the market and tracking it and using it for trading ideas?
Well, the service started in 1998.
Wow.
It came online. That was via mail, and then online in 2001. So, but prior to that, it was probably about 10 years. And what got me interested was I was managing the operations for a discount brokerage firm, and part of that responsibility was overseeing the margin and options department. And so when our margin clerks would call a customer that had a margin call, it was remarkable to me, because often I would be on the phone as well, how emotional these people got. And that's because they were so leveraged to what the stock was doing. And so that really kind of introduced me to the idea that a lot of times people are not rational, and especially when they have when they're leveraged either via margin debt or options or something like that, they become less and less rational. So I started kind of poking around our data internally and saw that when people were panicking and selling those margin positions, often that was coincided with a low in stock. So that's what really piqued my interest in the whole idea of using sentiment analysis.
When did you get started in the business? I mean, when you were 10 or something? I'm looking at your picture here, and you look like you just graduated high school.
It must be those cold Minnesota winters that keep us young up here, I think. No, I'm mid-40s, so I actually I went to school for finance and then started in the brokerage industry not long after that. So it's been a little over 20 years.
Wow. All right. So the reason I asked the original question is because if you've been doing this for quite some time, then what kind of readings did you get in 2008 and 2009?
Well, truly extreme. I mean, that was when we were at the depths of the panic there, and those were a lot of readings that we hadn't seen in a long, long time. Certainly 2002, 2003, at the end of that bear market, readings were somewhat comparable, but even in 2008, they exceeded those. So we were seeing people pull massive amounts of money out of stocks. We were seeing, decades low readings in sentiment surveys. Options indicators were odd. That was one of those indicators where there was something going on, whether it was people were hedging differently or something. I mean, that was something that wasn't confirming this extreme pessimism, but almost everything else was pointing to the idea that sentiment was stretched to a historic degree at that point.
So how do people make money using using your research and using sentiment indicators? I mean, it's not always a fade. Let's start for like just average long term and investor. I mean, I think day trading. I mean, is there anything in your sentiment data? I mean, that's kind of tough because you're going really on short term sentiment, and then also for how do the institutions use your data?
Yeah, short term, there are certainly things out there that can be used sentiment-wise in the short term. Day trading is not a focus of ours by any means. We do track some short-term stuff that's effective on a 1 to 5 day time frame. Most of what we track is most effective on an intermediate term time frame, which I mean is different for everybody, but the typical time frame is 1 to 3 months. And then we have some longer term things that are 6 months to a year. So typically what I recommend is that people look for something that's hated or has extreme pessimism and that is not hitting new lows because price rules, and we're seeing that with the euro right now. The euro, the peso, the yen. We've had extreme pessimism for a while, a couple of weeks, not an extreme time frame, but prices keep hitting new lows. That's not really a good situation. So if you're short one of those instruments and you see this level of pessimism that we've got now, it's dangerous to be short. But in terms of going long, typically you want to look for a more healthy market that's showing some signs of pessimism. And that's not a dichotomy. I mean, you do have bull markets where there are periods of pessimism, and you have bear markets where there are periods of optimism. And so you want to look at going counter to those readings. So that's typically what we recommend. And then if you look at individual stocks or sectors, the phrase that bull markets climb a wall of worry, that just kind of bugs me because it's not really true. People need to become more optimistic in order for prices to rise. And so that's what we look for. We look for sentiment above average, but not too high. And when you have that kind of situation, whether the market's in an uptrend or a downtrend, that market tends to continue to rise. And when you have sentiment that's below average, but not extreme, that price continues to fall more than likely. So that's what we recommend on a sector and stock level is looking for those kinds of opportunities. And certainly, at the extremes, if something is showing extreme optimism, you want to hold off buying or possibly consider shorting. And if something is showing extreme pessimism, you want to look at possibly going long.
So do you do it on individual stocks? Or do sectors?
We do.
Oh, wow.
We do. We track sentiment in each of the stocks in the S&P 1500.
Wow.
And that's based on the same measures. It looks at short interest. It looks at analyst recommendations. It looks at options trading activity. It looks at volatility expectations and things like that. And it measures each stock against all other stocks in the S&P 1500.
Could you give me a reading on Twitter?
Twitter is not one of them. It does require several years of history in order to be able to generate some kind of a score that we can judge based off the others.
How about Google?
Let me check to see if Google is on there.
It's been around for a few years.
It has.
If that doesn't come
it
up,
is.
Okay. What do you got for us on Google?
Right now, it's actually exactly in the middle of its range. It was showing extreme optimism as recently as last September, which actually ended up being a high for that stock. Hasn't shown pessimism in a while. I mean, we would have to go back to October of 2013 before there was actually some pessimism in that stock. Otherwise, it's been just kind of meandering around in a neutral range.
And I think that's kind of the way they want it. They split the company in two, and you just don't hear a lot. I guess maybe we'll get a big bang off the next earnings report. Okay, let's go to oil here. And holy mackerel! I mean, you got to have some extremely negative sentiment readings on that, I would assume.
Curiously not. It's a really unusual situation. If you look at positioning in the futures market, we still have speculators that are extremely net long crude oil futures. And that's not something that we've really seen the past times that it's bottomed. Just on a pure price perspective, if you look at, I call it a triple time frame rate of change. It's looking at the rate of change over the past 1, 3, and 6 months. Certainly it's in a crash. And the only other times it's been to this degree were in 1986 and 2008. And as spectacular as that decline has been, that didn't hit the lows in either 86 or 2008. It continued to decline another 30 to 40%. Not that I think we're necessarily going to see that here, but both times what we saw going forward was oil doing a typical bottoming action after extreme pessimism, where it would rally hard for a few days or even a couple of weeks, come crashing back down, maybe hit a lower low barely, rise back up again, crash again, and just go back and forth in this trading range. And in 1986 and 2008, we saw that both times before oil really hit a bottom. And so that's what I'm looking for here, given that we don't really have a confluence of extremes in the indicators that we look at in terms of showing extreme pessimism. I really want to see price showing some kind of a bottoming action, and we really have not seen that at all so far.
Okay, you mentioned that you, as part of your sentiment readings, you bring in what the analysts have to say, and a lot of times they can have the herd mentality. So do you just do it? Do you just comb their buy and sell recommendations and their price targets? How do you use the analyst data?
It's the recommendations. And you're exactly right. These guys are extremely sharp on an individual basis. They're intelligent. They have extremely good education from good schools. On an individual basis, they're fantastic. When you get them together, like almost everything else, there is a herd mentality. So that's true. When everybody's to one side of the boat, when everybody has the same opinion, typically that's baked into the stock or sector, and it tends to struggle after that or rise if there's extreme pessimism. So that is the clue. I mean, we look at consensus recommendations across however many analysts cover the stock. And again, rank it across all other 1,500 stocks and see how extreme their opinion is. And it's really amazing how that lines up with a lot of the other indicators. When analysts are extremely pessimistic, often that we're also seeing a high short interest in the stock. We're seeing a lot of volume in put options, and typically pessimism is very high. So they do follow the market in that respect.
And what about the charts, Jason? You pay any attention to those?
I do. I'm even though sentiment is not a trend following type of analysis, I am basically a trend follower in that I want to see a healthy market before I'm willing to buy. So that means something different to everybody, whether you use a 200-day moving average or whatever. I keep things extremely simple. I don't use indicators like RSI or
Nope.
the MACD or all these others. It's basically that just confirms price. So I look at a chart, and if it's going up and to the right, it's an uptrend. I mean, that's basically how simple I keep it. So if I see a longer term uptrend, and that's on a multi-year time frame, and then I look for periods of pessimism, and then I look to go long. And certainly there are those times where markets are in transition. If we're in an early 2008 kind of a time frame or early 2000 kind of a time frame, it's difficult to catch those transitory periods where we're moving from a bull market to a bear market and vice versa. So if I think we might be in one of those times, I look for some clues. Typically, we get really impulsive moves at the end of a long-term trend, and we're not really seeing that at this point. So.
Okay. All right. We're on the phone with Jason Goepfert, and he is the author of the SentimenTrader.com, also runs Sundial Capital Research. So before we let you go, Jason, so there's your sentiment readings. You're feeling, we had a little sell-off yesterday, but it's nothing to be too worried about, at least at this point.
I don't think so. On a intermediate term time frame of 1 to 2 months, I think that it could be relatively rocky. I do think we're going to head to new highs at some point before the spring. So, depending on your time frame, that's either a good thing or a bad thing. I think it's looking mostly good, just based on the momentum we've seen and the breadth thrust that we had off the December low. Those things rarely are seen at the end of a long-term bull market.
Okay, thank you, Jason. Jason Goepfert, founder and president of Sundial Capital Research and runs SentimenTrader.com, joining us on Benzinga's pre-market prep, brought to you by MarketFi. Jason, thanks a lot. We hope to have you on again soon.
Absolutely. Thank you.